There's a pattern in history that never fails. Every empire, financial or political, eventually reaches a moment when wealth becomes illusion and confidence becomes the last currency holding the system together. When that confidence breaks, everything burns. In 1929, the market lost 89% of its value. The Great Depression followed, crushing millions who believed prosperity was permanent. In 2008, the world watched banks collapse under the weight of mortgages that were never meant to be paid. It took trillions in bailouts and years of artificial recovery to keep the illusion alive. But 2025 is different. This isn't one bubble, it's three. Stocks, real estate, bonds, all rising together, inflated by a decade of cheap money and blind faith in technology policy and new economic eras. And when everything inflates together, everything collapses together. The stock market stands at valuations only seen twice before, right before disaster. 7 companies, Apple, Microsoft, NVIDIA, Amazon, Google, Meta, and Tesla, now control nearly a third of the entire US market's value. A single shock in one name could drag the entire system down. Real estate prices are 50% above their long-term trend, even higher than in 2008. Commercial towers sit half empty, their debts unpayable at current rates. And the bond market, the supposed safe haven, is cracking under $36 trillion in federal debt, where interest payments alone now exceed military spending. This isn't a theory, it's arithmetic. The math doesn't lie even when politicians do. Every major warning light is flashing red, inverted yield curves, insiders selling record leverage, and a Federal Reserve with no ammunition left. The same cycle that ended 1929 and 2008 is repeating, but this time the safety nets are gone. The Fed can't print infinite money without destroying the dollar. The government can't bail out the world when it's already drowning in debt. Picture this. Markets plunging 70%, homes worth half their price, banks closing doors, and the currency itself losing trust. History doesn't just rhyme, it compounds. And 2025 will make 1929 look small. Every great collapse begins the same way, not with panic, but with silence. The silence of people who believe things will stay the same forever. The silence before the graph bends downward, before confidence turns into disbelief, and disbelief turns into rage. That silence is where we are now. The world in 2025 stands on the edge of a mathematical inevitability. The everything bubble isn't just an economic event, it's a reflection of a civilization that forgot what value means. For 15 years, we've lived inside a laboratory experiment where money was printed faster than productivity could grow, where interest rates were suppressed below reality, and where the illusion of stability replaced the hard discipline of markets. This illusion wasn't accidental, it was designed. After 2008, central banks around the world rewrote the laws of finance to prevent another depression. They succeeded for a while. They replaced the pain of short recessions with the slow rot of permanent inflation. Every bailout, every round of quantitative easing, every trillion-dollar rescue plan stretched the system further until the extraordinary became normal. But here's the paradox. The more they saved the system, the more fragile it became. Today, we're witnessing the consequence of a generation that believed the Federal Reserve was invincible. For years, investors bought every dip because the Fed would always print, always cut, always rescue. That belief built fortunes, but also blindness. When risk disappears, discipline dies. When discipline dies, collapse becomes inevitable. The core mechanism of the 2025 crisis is faith and its evaporation. Faith in central banks, faith in asset prices, faith that this time is different. It's the same faith that existed in 1929 when the radio, the car, and electricity promised a new economic era. The same faith that ruled 2007 when home prices could never fall nationwide. And it's the same faith that rules now, only multiplied through global connectivity, instant speculation, and algorithms that trade optimism at the speed of light. But behind every bull market lies the same arithmetic: debt grows faster than income until the weight of debt collapses the structure itself. The United States now carries $36 trillion in federal debt, more than the GDPs of China, Japan, Germany, and India combined. Corporate debt exceeds $10 trillion. Consumer debt sits at record highs in credit cards, auto loans, and student loans. Every household, every company, every government has borrowed tomorrow to pay for today. Debt is not the problem. Belief in infinite debt is. In 1929, 10% of Americans owned stocks. In 2008, 65% owned homes. In 2025, nearly everyone is inside the bubble through retirement accounts, index funds, real estate, and government bonds. When the crash comes, there will be no safe corner, no unaffected class. The collapse will not be on Wall Street. It will be everywhere in pensions, mortgages, savings accounts, and jobs. The most dangerous feature of this era isn't valuation, it's concentration. 7 companies: Apple, Microsoft, NVIDIA, Amazon, Google, Meta, Tesla hold 30% of the US stock market's total value. When one stumbles, the entire index falls. This is not diversification. This is fragility disguised as strength. It's 1929 with faster data and prettier charts. The pattern repeats because the incentives never change. Cheap money creates greed. Greed creates bubbles. Bubbles create collapse. Collapse creates fear. And fear eventually demands cheap money again. It's the same eternal cycle, only this time we've run out of cheapness to give. The Federal Reserve has raised rates but can't lower them without triggering new inflation. The government can't spend more without breaking the dollar. The system has reached its final stage, trapped between deflation and hyperinflation, between freezing and burning. This is not a crisis that can be solved. It's a correction that must be survived. Because the real story of 2025 isn't about markets falling, it's about trust evaporating. When trust dies, the economy dies with it. When money itself loses credibility, the collapse spreads from balance sheets to belief systems. That's how empires fall, not from invasion, but from exhaustion. Look closely, and you'll see the same forces that destroyed Rome, France, Weimar Germany, and Japan's miracle economy, currency debasement, debt addiction, political denial. Each time the elites believed they could outsmart the cycle. Each time history reminded them arrogance is not a strategy. The everything bubble is the final experiment of the modern financial age. It's what happens when an entire civilization decides to borrow from its own future and discovers that the future has nothing left to lend. History proves it again and again. Every financial civilization follows a rhythm, a pattern older than money itself. Expansion, euphoria, excess, denial, collapse, reflection. Each age thinks it has broken the cycle. Each age becomes the next example in the pattern. The 2025 crisis is not new. It is the third act of a repeating story, the same mechanics that destroyed Rome's silver Spain's gold, Britain's empire, and America's illusions of endless prosperity. Let's trace it through 6 stages that always end the same way. Stage 1, expansion, the age of easy money. Every empire begins with optimism. Rome's silver denarius once held 98% pure metal. Spain's galleons arrived heavy with New World gold. Britain's pound was as good as gold. America's dollar was backed by industry productivity and trust. But prosperity breeds a dangerous assumption that growth can be manufactured on command. In the 2010s, the United States entered its own golden illusion. After 2008, the Federal Reserve slashed rates to zero printed trillions and promised that stability could be engineered. The medicine became the addiction. Artificial money replaced real productivity. Every problem, debt, unemployment, even pandemics, was met with the same solution: print, borrow, and believe. For a while, it worked. Stocks soared, housing boomed. Bond yields fell to record lows. The cost of capital vanished, and with it, the memory of consequence. But by 2020, the foundation had shifted from real economy to monetary fantasy. The seed of collapse had already been planted quietly, invisibly, mathematically. But the pattern had already begun. Stage 2, euphoria, the illusion of a new era. Every bubble disguises itself as a revolution. In 1929, it was electricity and the automobile. In 2000, it was the internet. In 2025, it's artificial intelligence. Investors convinced themselves that machines would rewrite capitalism, that valuation no longer mattered, because AI changes everything. Nvidia, trading at 65 times earnings, became worth more than the entire German stock market. Apple and Microsoft were valued higher than most continents. The same story echoed from trading floors to dinner tables. This time, it's different. But history's cruel joke is that those 5 words spoken at every peak are always wrong. By the time optimism becomes culture, it's no longer optimism. It's delusion. Retail traders bought options with credit cards. Corporations borrowed to buy back their own stock. Governments borrowed to pay interest on older debt. The illusion was perfect until reality asked for payment. The euphoria of 2025 feels like the summer of 1929. The jazz still plays, the lights still burn, but beneath the music, the floorboards are cracking. By the time they realized it was too late, stage 3, excess, the systemic overload. Leverage is not just financial, it's psychological. It's the belief that more will always be available. More credit, more liquidity, more rescue. In 1929, brokers offered 10-to-1 margin loans to shoe shiners and factory workers. In 2025, the leverage is hidden in derivatives, ETFs, and the digital shadow banking system. Options exposure margin debt and corporate borrowing have all reached record highs relative to GDP. Even the U.S. government, once the lender of last resort, has become the borrower of last resort. $36 trillion in debt, rising by $1 trillion every 100 days. Interest payments now exceed defense spending. The bond market, once the pillar of safety, now trembles under the weight of unpayable promises. In 2008, the system's weakness was confined to housing. In 2025, it's everywhere. The world has built a skyscraper of debt on a foundation of sand, and the tide is coming in. The warning signs are visible to anyone who chooses to see them. The yield curve inverted for 27 consecutive months, a signal that has preceded every recession since 1950. Corporate insiders selling record amounts of stock. Warren Buffett hoarding $325 billion in cash, the highest in history. Regional banks already failing before the recession has even begun. When the strong prepare for collapse, the weak will not survive it. 𝗬𝗍𝗏, denial the calm before the fall. Every civilization reaches a moment when truth becomes politically impossible. Rome debased its silver to fund endless wars. France printed assignats to keep bread on the table. America prints dollars to keep markets afloat. Officials insist that the economy is resilient even as delinquencies surge, savings vanish, and layoffs accelerate. Denial is not a policy, but it passes for one. The Federal Reserve insists it can engineer a soft landing. But you can't land an aircraft whose engines have already failed. The illusion of control is the last illusion before impact. Denial also lives in the public psyche. People scroll through stock tickers as if watching weather forecasts, pretending that numbers can be willed higher through optimism. But faith can't rewrite math. A debt-based system can't grow forever, and so the silence returns. The silence before the break. History doesn't repeat it, evolves, and the next stage has started. 𝗬𝗍𝗶, collapse. The arithmetic of reality. Every bubble bursts the same way all at once, and then slowly. First comes the trigger. A major tech stock missing earnings, a regional bank collapse, a geopolitical spark. The cause will seem small, but when the system is this leveraged, any spark ignites the structure. Algorithms sell, margin calls multiply, institutional stop losses trigger. Within days, the markets fall 20%, within weeks 40%. Homes lose buyers, mortgages go unpaid, commercial towers default, banks close their doors. The Federal Reserve will face an impossible choice. Cut rates and ignite inflation, or hold steady and watch depression unfold. There is no third option. The US dollar, once the refuge of safety, becomes the epicenter of fear. And when the currency of the world loses trust, the collapse is no longer financial, it's civilizational. Picture this. The screens go dark, the tickers freeze, and silence fills the streets. This is how empires end, not an explosion but implosion. Not with conquest, but with surrender. Stage 6, reflection. The lesson that no one learns. Every generation vows to remember the last crash. Every generation forgets. The survivors of 1929 lived with discipline and caution until their children discovered leverage again. The veterans of 2008 swore never again until low interest rates made again irresistible. And the people of 2025, who believed history was a chart that only went up, will learn the same lesson every empire learns. Too late. You can delay gravity, but you can't escape it. When the smoke clears, there will be new names, new technologies, new currencies, but the same human weakness underneath. The cycle will restart quieter, smaller, until greed wakes again. History is not a teacher. It's a mirror. And in 2025, it's showing us our own reflection, distorted by time, amplified by arrogance, and illuminated by the fire we lit ourselves. Section 1. The reflection of the present. We are living inside a mirrored century. Everything that destroyed past empires has returned, repackaged in apps, data, and optimism. The technologies are new, but the psychology is ancient. Look around markets inflated by artificial intelligence euphoria, cities hollowed by remote work, governments drowning in debt yet promising more spending, and ordinary people trapped in lifestyles financed by credit, not income. It feels stable until you measure it. In 2025, U.S. credit card debt exceeds $1.1 trillion, the highest in history. Delinquencies are rising fast. Student debt has passed $1.7 trillion owed by a generation that can't buy homes or start families. Corporate America owes $10 trillion, much of it borrowed to buy back its own stock. The United States government itself is now the world's largest debtor, paying over $1.2 trillion a year just to service interest. Every number is record-breaking. Every record is a warning. What we call the modern economy is a global shell game, money created by debt circulating through speculation, sustained by faith in central banks that have already spent their credibility. The Federal Reserve can no longer lower rates to zero because inflation is still smoldering from 2021-2023. It can't raise them without freezing credit markets. The machine is locked, engine roaring, no brakes, no steering. But the deeper crisis is cultural, not financial. We've built an economy of distraction consumption as identity speculation as patriotism. The middle class once built the world. Now it rents it from corporations and hedge funds. Home ownership savings and dignity. The foundations of stability have turned into luxuries. The economy runs not on production, but on dopamine. Just like the 1920s, the average person feels prosperous right before collapse. Wages look stable, stocks are high, and the noise of progress drowns the warnings. But behind the facade, the system is rotting from within, not from lack of wealth, but from too much borrowed wealth. And now we're walking the same road they once did. Section 2. The future. We've already chosen. The 2025 to 2026 timeline isn't prophecy, it's geometry. Every curve has a breaking point, and this one has already been drawn. The warning lights are flashing everywhere. Yield curves normalized after 27 months inverted the most reliable signal of an imminent recession. Commercial real estate faces $2 trillion in refinancing at double the interest rate. Regional banks already failing in a calm market imagine the storm. AI mania driving valuations into orbit while insiders quietly sell. Warren Buffett, the world's most patient investor, hoarding cash and calling valuations dangerous. Meanwhile, politics decays into theater. Each side blames the other for problems that are mathematical, not ideological. Nations print money to fight each other's inflation. The West fractures over budgets. The East fractures over demographics. China's property implosion mirrors America's 2008. Europe faces energy shock migration and aging. The global order is dissolving into currency blocks and trade wars. When the crash arrives, it will not stop at Wall Street. It will roll through pensions governments and daily life invisible first, then unstoppable. Prices will rise even as jobs disappear. Savings will shrink even as debts remain. The illusion of safety, the belief that the system will always self-correct, will die first. This is not the end of capitalism, but the end of its current illusion. After every collapse, societies rediscover simplicity, production, discipline, and restraint. But only after pain forces them to remember. We like to think history repeats itself. It doesn't. It rhymes with sharper consonants, faster tempo, and higher stakes. 1929 broke the few. 2008 broke the middle. 2025 will test everyone, because the world has reached the same conclusion every empire reaches before it falls. We've mistaken credit for wealth and confidence for truth. When the dust settles, it won't look like ruin at first. Markets will pause. News anchors will whisper of temporary corrections. Politicians will promise calm, and economists will model recovery. But beneath the language of reassurance, the old order will already be gone. This is not merely a financial reset, it's the end of an age, the age of easy money, infinite debt, and moral outsourcing. The illusion that we could borrow against the future without ever repaying it. Every empire falls the same way, slowly at first, then all at once, not from invasion, but from internal decay. When confidence breaks, wealth vanishes faster than it was ever created. The screens will still glow, but the numbers will mean nothing. The everything bubble was not about markets, it was about faith. Faith that systems never fail, that institutions never lie, that mathematics can be postponed by hope. But hope cannot refinance infinity. And when the cycle resets, the lessons will be cruel but clear. The true assets will not be stocks or bonds, but skills, community, and time. The next generation will grow up skeptical, disciplined, and sober. They will rebuild from scarcity what we destroyed with abundance. Empires never fall from outside. They collapse from within. The same light that once illuminated the world will dim under the weight of its own reflection. When historians look back at 2025, they will not ask how it happened. They will ask why no one stopped it when they still could. Because history doesn't punish ignorance. It punishes arrogance. And the reckoning has already begun.